Good day and welcome to this installment of the Royal LePage Binder Market Report. My name is Dominic Papa. I'm thrilled to be your host. And of course, the man that gives us all the great information as far as the real estate world goes is that of the broker of record at the Royal LePage Binder, Mr. Frank Binder, who joins us here today. Good day to you, Mr. Binder, and always great to see you. It's been about a month since we last spoke in our last edition of the Royal LePage Binder Market Report. And, I still talk to a lot of people and I'm just sensing that things have come to kind of like it's almost kind of like it's just leveled off. Fair to say that?
Fair to say, we've been dropping for months now, and this is where we're headed. We have probably the largest drop we've had ever. It's in August. But let's understand all these things were coming together at once. Interest rates were climbing, and people were finally getting free of the pandemic, if you will. They've been sheltered for quite some time, and we're headed out of town. A lot of people are going in that. Even my own salespeople were taking their families and just heading out of town. So all that stuff is going on, and so that really precipitated a major drop in our market for August, roughly just a little bit over 40%. In our first slide, we're going to show you basically what's happened since the beginning of the year. And we had one up month, and then we've kind of dropped that going forward. So that's the kind of stuff that we see. But you'll notice in the very end of the slide, if you bring that up.
Yeah, let's get the monthly residential sales chart up if we can.
Exactly.
There we go.
So if you bring that up, the monthly residential sales there is, you'll notice that we peaked out we had an increase in February, but after that we started having drops, right? So incremental drops, then you'll see in April. And it's so interesting, if you were to pinpoint where the interest rate changes occurred back in April and also in July, look at the difference there right now. So what you've had is you had a big interest rate change back in April, and you had a nosedive all the way down to July.
Yeah.
We've had the interest rate change in July coming into August, and it's barely a percentage point down, right? So what I'm seeing here is probably we're hitting close to the bottom of where we're going to bottom out, so to people. We've had basically, we recognize, and it's a fact that the buyers are sitting on the sidelines. When the market's dropping, nobody knows how far it's going to drop. The tendency is to sit back and wait to see before I make a decision, and that's a proper thing to do, I would think, for any buyer to make that decision based on that. So, but what we're seeing is only an incremental drop now in the month between July and August. And I think we wanted to create this graph only to show that, because we may be at the bottom of the curve. We'll know obviously more in September if that's going to go up. There is some evidence that it may, only from the standpoint that we've got other slides that will address that in. But basically, we had 42% drop. We also should say that in the under and over market, which we also talk about, under 550, almost very little change in the under 550 market. So the lower end of the market was still fairly robust. We had 302 sales there, unit sales in homes in August. So we're seeing a fairly steady buying of homes under 550. What we're not seeing is that happening in over 550. It really has dropped. It dropped to 132 homes. And normally what's been leading the pack is the upper market. And now what we're seeing is that the lower market is holding its own, and the upper market, they've walked away from it. And that's really evident in the over 1 million category. What we see this last month, we only had 15 houses sold compared to 22 last month. And that's a downward trend, continues to be a downward trend. People who are that are selling their houses in the upper market just aren't getting what they want. Some of them are walking away from because they're not getting what they want, and that's basically what's happening in that market.
So let's, if we can, Mr. Binder, let's throw up the next slide. Units sold by price range, because that's what you're talking about.
Yeah, exactly.
So before we get into that a little more, though, the downward spiral. when you look at a chart like we just looked at, it looks pretty harsh.
It is.
Is that typical in the real
Well,
estate
no,
industry?
I'm showing you the monthly, and we have to really understand that this is a monthly thing. So when you're looking at that, this is what's happening every month. But absolutely, when you aggregate that, okay, you're going to have people talking about the average sale price being into the 600s, and it's dropped down a bit. But remember, that's a 12-month average. When you take a 12-month average, you take all the months together and you average it out, and it's not as harsh. It's only a smaller drop. But what I'm showing you a trend there. What I'm trying to do in that graph is really just to show you the trend. It's not really what the average turns out to be, because we always quote an annualized average. That is the fair way to show the market. But bottom line is we need to show you what's going on behind the market, and that's exactly what's happening behind the market, and as to why that number is being reduced over time. And we'll be talking about that shortly in another slide. But basically, we're just showing at the 302 is that the interest rates are not affecting the buyers that are buying homes under the 550 as much as those who are buying more. And that's to be expected, because the cost of your money for people going to mortgages of well over 500,000 are well over $400 to $500 a month in their mortgage. So they're acutely affected. And when the second rate came up, even more so, right? So those are the things that are going to happen to our market. We're going to see less sales in the upper market, just because the cost of doing so is markedly different. The people who are buying first-time home buyers, listen, they had the stress test, so they would have to be pre-approved on the stress test anyways. This is not something that they would have been affecting them so much in trying to decide on a home. So that's what happens in the market with regard to financing, right? So if we go to the residential listing, we can see that we're at 1,000, which is still over last year. All right, it's still over last year in a sense, but it's really down from August. So what we had in August, we had well over 1,500 homes for sale that came onto the market, 1,567 houses in the market. But it's still showing an increase from last year. And this is where we get a little stuck with numbers, right? We show an increase of listings barely from last year, but really it has come down. So all the people who jumped into the market with their houses to sell, they tried to do that in August. And what we're seeing now is a bit of a leveling off to what was closer to last year, and which we didn't have a lot of listings last year. You'll remember why the prices went up last year was because people were not putting their houses on the market during the pandemic, and so we're starting to go back to those levels of the listings that we've seen, and that will continue to be the case. And also, one of the most important things is that the inventory. We talk about inventory. A number of houses that we started September with, they were around 1,595 homes. But if you remember, the number that we started August was with 1,660 homes. So that the inventory has reduced over that time. It's still about a 3.5 month supply. So there's substantial supply of houses, which will continue to put pressure on prices, because now I've got a selection, so I can select houses as a buyer, right? So those are the types of things that are going on right now. We should also point out to you that the days on market continue to increase. So it's gone up to 24 basis days on the average, and the month before it was about 23. So not a huge change there, but it's taking longer to sell houses just because the inventory is so much greater, right?
Yeah, well, speaking of inventory, let's take a look at the next chart, and it talks about exactly what you just brought up there, Mr. Binder, the number of active listings.
Yeah,
so
yeah, those are exactly this. So what do you see though at the very end? For the first time, it's not increasing. I mean, look at all the months, January all the way up to July. It peaks in July and starts to drop a bit in August. So I mean, that's what we're seeing, and we'll likely see. As a result, you're going to start seeing that curve down. The inventory will continue to drop, and that's a good thing in terms of getting more of a balanced type of market that we need to get to, and that's going to be the case for sure. But that's the first time we've seen actually a drop in the inventory. that's a sign of things to come. I think that people are going to get settled with what they, whether can I get the big price or I can't get the big price. Price will be a less of a determining factor from a seller's point of view in trying to put their house on the market. Now they're going to put their house on the market because I need to sell it, and I've got plans, and that type of thing. So up until this point, a lot of people are getting big bucks, and they were jumping in the market just to see if they can get the high number for the house. We've got lots of people that are retiring. I mean, so they're looking to cash in their biggest asset to be able to retire. So unfortunately, that is now over in terms of where you're seeing that. You're going to see that curve continue to drop down a little bit. So that's
All right.
basically it.
So with that said, with the number of listings, that of course that would also, I guess, dictate some of the average sale prices that are out there now.
Yeah.
So let's go to that chart and explain what's happening there, sir.
All right. So remember we talked about, I showed you that first chart showing you what the monthly numbers were.
Mm-hmm.
Well, here's what the aggregate is for the annual. So last month, our average sale price was on an annualized basis was 662,000. We're now to 648,000, and that shows just an incremental drop. But you see the trend that was happening there. It was because you had the trend. That's why you're seeing an annualized drop, and you will continue to see that as the annualized as you continue to do the annual rates. You're going to see that continue to drop down as a result of what you're seeing on a monthly basis and what the monthly trends are. Why do we show you the trend? Because if we have a 3-month trend, that 3 months establishes what a trend is. And so what we're trying to do is show you what the trend is so that you get a sense of what is coming, right? And that is a precursor to drops in price potentially, but they're only a little bit, right? But if you take the drop from the beginning of the year, I mean, remember way back in January, we hit March rather, we hit 700,000. So when you see that drop, now we're down to 648. It's not a substantial drop. Okay, from where we were, we're going back to numbers that are certainly still above January and certainly above what was happening in 2021. We're still above that, so it's not something. Are we going to erase the gains that we had so far this year? More than likely, there's no question about it. We will more than likely erase those gains over time. I would expect in the coming months that you'll see that the average annualized price of a house will drop back to below 636 if the trend that I'm seeing continues.
All right. So if I'm a buyer, a first-time buyer, let's go even at that, should I wait a little bit here, or is it really going to make a difference?
Listen, you've got to listen to the economics for your sake. I mean, that's really the bottom. You make the choice based on economics as a buyer. Those people who are less affected, I don't say we're all affected by the increase in interest rates, just without question. But depending what you're buying, you could be less affected. We see that in the lower end of the market. We've seen people coming back to the market. We've seen people who've been sitting on the sidelines starting to arrive back into the market, starting to look again, and we've seen a pickup in that. And when we get to our last couple of slides, we'll show you in real terms that is happening. So I think really at this point in time, I think buyers have kind of settled on, okay, this is the reality. I need to buy a home, and here's what it's going to cost me. You'll remember what happened this time around with the interest rate. Nobody predicted a higher rate this time. What they're simply saying is that this may be it. We're not sure based on other economics, job loss. All these various different things are going to come into play in terms of the Bank of Canada deciding whether there's going to be further interest rates. And also the inflation. What have we seen with inflation? We're starting to see drops in inflation, gradual drops. And so it's basically saying, listen, what they have done, the bandage that they apply to the economy, so to speak, it's being effective. And we're not bleeding as much. So the bottom line from our standpoint is, with all those factors in, you've got to pay attention to it. All right, it's a good time to buy. Why? I've got lots of choices. So they may not always stay that way, and our market continually changes. So the whole thing is really, we're saying, start looking at houses, start making up your mind. you're likely going to pay what you're going to pay right now, and don't wait for more drops because you might not see them, right?
You might lose out on a house that
And you
should
might
have.
lose on houses that are
Yeah,
currently there, especially with the choice that you have, right?
yeah.
Yeah.
With that said, let's take a look at the monthly average sale price now that
Yeah.
we're dealing with.
Yeah, and you can see the trend lines there. So if you go back to March, okay, see the number there. The one that we had just before was 700, but you see that the monthly actually reached up to 723. But when you aggregate this over a 12-month, it only comes to 700.
Right.
So it's not indicative of what's exactly in the market on the average. And so you've got to be careful when people are dictating numbers to you, exactly what number you're paying attention to. But this is a trend line for my salespeople to look at and to say, okay, yeah, this is where it is, and now it's trending downward. But look at where it trended down to, right, in August. Okay, the August number is 520. The average sale price on an annualized basis, was 660 something, right? So it's far from 520. Is the future going to continue to be that way? You're probably going to see this start to bounce back up a bit. You're going to see this level out on the monthly basis as people enter the market again, and as the activity increases. So we're not showing you a curve up at this point in time on the monthly average sale price, but we're also saying unlikely that it's going to continue dropping down, because there's evidence that buyers are going back into the market, and when they go back in the market, the pricing drop really comes to an end at this point in time. So I wouldn't predict, if I were anybody, that this is going to continue. I would more likely say that you're probably getting to the bottom at this point in time, very close to the bottom anyways. All right. So
Right.
it shouldn't hold out, in my opinion.
Yeah. Okay. So something you were touching off on earlier, the amount of homes that are available. So
Right.
let's take a look at the sales list ratio,
Yeah.
and you can explain to our viewers how this all works.
And this is exactly, it plays into what I've been saying all along.
Mm-hmm.
The important thing is that you're not seeing a drop in the amount of the sales list ratio as much. We had drops on a monthly basis of substantial drops, but this is what's going on the annual basis. So we only had 1 percentage point drop. What does that mean? It means that we're stabilizing. The market is starting to stabilize again, and then we're not seeing substantial drops on an annual basis. So I think what we have to start looking at is when that number kind of comes to a level like this, it's something for us to pay attention. We pay attention to it as realtors. I think that buyers have to pay attention to it as well. And I think it's really, really important for us to note that. And this is one of the reasons why we've done this graph, just to show you that type of thing. But the bottom line is that even from a monthly basis, the annual, the interest, our monthly numbers, by the way, it was 30% the month before. And so if you look at the 51%, the monthly number for July was 30, which meant only three out of we don't have a graph on that, by the way. The month was only 30 houses. That's only 30 out of 100 houses sold. And basically, it's now in the month of August, 37 out of 100 houses selling. So what we see in the monthly thing is the monthly average is actually trending up. Okay, what did that do? It was only a 1% decrease in that graph that we just showed, right? So the graph that we just showed was the sales to list ratio, and it's just showing a small drop. But in fact, on the monthly basis, it's actually gone up by about 7 basis points, which means that will trend and that will stop trending down anymore. And here's your graph that says that exactly what we're looking for. So you've got 30 in July, and you've got 37 in August. On the annualized rate, it comes out at 50, 51, and 50, right? On the annualized rate. So it's really, really important for people to understand that. So when we look at this, what's happened? Well, the sales to list ratio has improved. So that's basically saying people are buying more houses that are available. And that's really important for us to take note. So you actually hit a bottom on a monthly basis. And if we continue to see that going up into the next couple of months, you would have hit the bottom already, and you're not in the bottom anymore. So that's really, really important for people to take notice that more houses that come on the market are being sold from a low of 30, and they're going the other way now. And that's really important for people, for buyers particularly. Take note of that. That's really important.
Okay.
All right.
Let's go to the year-to-date sales list ratio. See what that looks like. We've got through the monthly one. We've done the sales list ratio itself. Here's the year-to-date.
Yep,
And
there you go. So, I mean, what happens, this is translated, you'll notice it's much more gentle slope because it's an annualized rate. So when we talk about sales to list ratios, when you go way back to February, you see 82. That meant out of every 100 houses, 82 houses sold. And that's quite a big number. It was definitely a seller's market, and that's what was happening. And you see how it's gradually dropped down over time. And then now what happens, it's kind of bottomed out into August, and when we talk about that monthly rate, it actually went up. So that's why that rate is now stabilized, and out of every 100 houses, 50 houses are selling, and that's basically what it is. Where is that market? Well, that market is a balanced market. We call it a balanced market. It's not a buyer's or a seller's market, but it's going to be negotiated. So we see going forward, a lot of buyers and sellers are going to negotiate a price on their own. We're not going to see, we do see some of the multiples still happening, but there's many more, probably the majority will be negotiated going forward. We're seeing conditional offers again. We're seeing a lot of these types of things that we haven't seen for the last 2 years because of the pandemic. So it's a more normalized market that we're seeing. Nobody should panic about it. It's just exactly what we expect to see going forward, and that's really that's actually not a bad thing at all.
I'm curious, Mr. Binder, you mentioned the pandemic a couple times here, and how much of the pandemic, the lingering effects from the pandemic is still affecting the real estate market here?
The best description I've had is I attended a conference with RBC, an economic conference. They talked, the guy that talked about it said, really, it's like having a beach ball. A beach ball, and you take the beach ball and you push it, and that's the economy. You push the beach ball into the water and you hold it there. Well, that's what happened in the pandemic. They stimulated the economy, did all these types of things to try to keep the economy where they wanted it to be. And then they, at the end of the thing, what happened? You let the beach ball go. What happens with the beach ball? It shoots up and it goes up, and so everything gets in. And what happens eventually, it does come back and floats on the water. So the bottom line is that's what's happened with it. Interest rates shot up, all the changes that occurred. Of course, it's going to affect our market substantially. We should know that it was going to affect our market, and ultimately it's going to settle. We're hoping that it's going to settle not in a recession, but in hopefully a general landing. But one can't talk about that. I don't know what the economics are and where they're going to end up, because there will be some economic fallout from the pandemic. We should expect that. So exactly where it's going to be, it's a little bit hard to tell at this point, because there's still things playing out. Supply issues playing out, inflation playing out, and now we're talking about job loss, this type of thing going on. So all those things will play out over the incoming months or the upcoming months, and we'll see where that's going to be. We suspect that we will continue to take a bit of a drop, but it's not substantial drops, okay? Either in price or in unit sales. We should be seeing a gradual improvement in unit sales.
We need that pandemic thing to just be gone. we just
yeah. Remember, it wasn't an easy entry, and it's not an easy exit.
No way. That's one tough cookie, that's for sure.
But you're right. We'd like to see it over with.
Oh my, yes. We need everybody healthy, and we need business going straight forward in a good direction.
Yeah, exactly.
No curveballs here needed. That's for sure.
That's true.
The last chart we want to check into, Mr. Binder, here is and this one I kind of was really interested in, the most popular style of home for August.
Yeah.
And a lot of people may not think about that, but yeah, people want a certain style of home. Yeah. They're not just going to settle on another kind.
Yeah, you know what? It's funny because my wife is from Toronto, and all you have is 2 stories. And
right.
When she came to Windsor some 20 years ago, she was absolutely stunned by the number of ranches, bungalows that we had around here, and because we have plenty of land. And now you see, obviously a lot of subdivisions with two-story houses going up, that type of thing, because obviously density is becoming an issue. But still, at this point in time, it hasn't really changed. The graphs are basically staying basically the same. Between raised ranches and ranches, it is by far the majority of our properties being sold. And it's kind of interesting. It's almost half of that graph. But we have a good diversity of houses, and that's an interesting thing. So you see, you look at ranches, you look at bungalows, you look at raised ranches, and that by far is making up the majority of the sale of houses here. And we just think it's an interesting graph. We wanted to show it to people as to what the popularity of it is. And it really doesn't mean, it doesn't really have anything to do with the sale of your house. You can look at the average prices there and, as to what they're getting for those bigger units. But it's just an interesting graph for everybody to look at. And it's not some of those graphs that we've been showing, which are very economic, right? So it's kind of neat.
I'm curious. There's a lot of builders out in our area, and there's you can see a lot of houses, condos being built.
Yeah.
How much association do these builders have with a company like yours, and seeing what people want, what they should build, perhaps?
Yeah, it's limited. I mean, they're. I mean, I got to tell you, I'm delighted to see the condo apartments going up. Because that has really impacted first-time buyers, right? We've talked about this several times on our show here. It's really quite important for first-time buyers to have places to go, places to buy that they can build equity in, and that's been a really great tool. All of what you're seeing right now are pre-sales. So they've already been sold. People are going to inhabit them, and that's basically it. Going forward, it's hard to say exactly where that market will go, because if the price of housing, the price of new housing doesn't how shall I put it, stop going up. It's climbing, it continues to climb. Now, softwood lumber apparently has dropped a bit, so we're seeing some changes there. Hopefully, if that would be the case, new house construction will continue to be robust. If you don't, what happens is that because the price on existing homes having dropped, if the gap gets too big, people go to existing houses as opposed to new homes. And so what happens is in the pandemic, people were looking for houses, couldn't find them. They went to new homes construction for sure. And because the availability wasn't there. We'll see whether that continues in the upcoming year or so. But I would expect that new home construction will tail off a bit. They're already starting to feel those effects, and you'll see maybe a little bit less of that. But many of the projects that are underway are already pre-sold, and they're ready to go. So we should see the completion of those.
Well, if I was a builder, Mr. Binder, the man I would seek out is you. That's for sure, to get some really good advice and really understand this market. You know it better than anybody. So we really appreciate the time you're giving us here today. And this is great advice, really good information. So I'm sure a lot of people do appreciate it. So next month, can you give us a little tease what we might get into here a little?
Well, hopefully we're going to have good news to tell you that we've hit that bottom and we're kind of moving up, and not moving up, but gradually. I mean, don't expect anything big to happen, but maybe what we'll see is that we won't have further price drops, and it will level out. And basically, that's it. I'm quite excited, quite frankly, by the market that we have. Where I mean, we're going to take some time to try to sell a house. Sellers need to know that you're not going to get the sales to occur as quickly as you thought you could. Plan around it. Make sure you plan that. That will be important for them to understand that. And I think basically the use of a realtor in the sale of a house will become even more important going forward. None of this, puts the house up for sale and maybe it just sells in 5 days. And basically we get a sense of why do we need you. You're going to need a realtor. You're going to need them to negotiate all this going forward, particularly in the times ahead. And so I'm excited that realtors will have to hone their skills, so to speak, and do what they have to do to get a house sold for their clients.
Well, that's why anybody that's watching this show should consider Royal LePage Binder Real Estate. They've got tremendous professionals there. They can help you with all of your real estate needs. Of course, Mr. Frank Binder, the leader there, great guy to have as an information source as well. Thanks for doing this with us today, Mr. Binder.
Thank you.
Again, we'll look forward to seeing you next month. Take care, stay safe until then. And again, anybody that wants to get any information, just go to the Royal LePage Binder website. Also, they're on all of the social media forums. You can ask questions, they'll take care of you. Certainly, they're a great source to have if you're looking for anything real estate wise. Until next month, this is Dominic Papa thanking you for tuning in. Hope you enjoyed this edition of the Royal LePage Binder Market Report. Take care, stay safe, and we'll talk again soon.